Hello guys and welcome back to another video. In this video I'll be explaining to you what AMD is, or accumulation, manipulation, distribution. In other words, it's also known as Power of 3. Before we start the video off guys, you must understand the term of open low high close and open high low close. So an open low high close bar is simply a candlestick. Let's say for example this right here was a daily candlestick. We would see the opening price right here. With this candlestick right here, we form the open of the candle. We then see the low of the candle form right here, before us seeing the high of the candle form, having a retracement off of the high, forming the closing price. The exact same thing would be said for an open high low close bar, whereby we've opened up on the daily candlestick. For example, if this was a daily candlestick right here, this could be a weekly, a monthly, hourly, right? We see it open up right here. We then see the high of the candlestick form right there, before us distributing down to the downside, forming the low of the candlestick, and then having a retracement off of the low, forming the closing price right there. Now, if you guys want a more in-depth explanation of open low high close and open high low close, I will have that linked somewhere on the screen right here, so you can go watch that video and get a better understanding. Okay guys, now that I've explained to you what an open low high close bar is and an open high low close bar is, I'll now be going over what the terms of accumulation, manipulation and distribution mean. So let's start off by explaining what accumulation is. So accumulation is simply the consolidation that we see in the market. So the accumulation right here in a bullish example would be right here. We can see a nice consolidation right here. Same thing would be said for a bearish example. This is your accumulation right here, because we are consolidating here. Now the manipulation is simply defined as the fake move of the day. Okay, so in other words, it's the Judas swing, right? We see the low of the day form with the manipulation right here on the bullish example. This would be our manipulation. This is where we deviate from our accumulation. And similarly, we have our accumulation for a bearish example right here. This is where we deviate from the range, and this would be your manipulation. Now the manipulation phase serves two purposes. One, if we take a look at the left hand side example first, the manipulations will take breakout traders on the wrong side of the market. So let's say we see a breakout below this low here. The breakout traders will be looking to sell on weakness. So now they are selling at a low price. Smart money will use that to their advantage. They will buy those that are selling at a low price, and we will then see some displacement here on a bullish example. Right, we'll see displacement and we'll look to enter along with smart money, seeing the daily range pan out, and then smart money will then buy back, sell their position at a much higher price. And the same thing would be said here for breakout traders. They will look to break above this high right here. They are now buying at a high price. Smart money would then be selling at a high price, because now there's a transaction here. In other words, liquidity. For there to be a buyer, there has to be a seller, right? So then we see some form of displacement after smart money has initiated their selling. We then look to enter along with smart money and see the daily range pan out. Now the manipulation phase serves another purpose, where if we take a look at the left hand side first, the manipulation will look to take out those that are buying early. So early buyers, let's say they have their sell stop below this swing low right here. The manipulation will take those that are looking to go long right here, so they get taken out, and also breakout traders will get taken out. So two parties are getting demolished right here in the manipulation phase. Same thing here. Those that are looking to go short right here, they get stopped out right here with their protective buy stop, and then the real move of the day ensues as shown here. And then finally guys, once we've seen the manipulation phase occur, we will then wait for some displacement and then look to enter along with smart money to then see the daily range pan out. And then once we've seen our manipulation occur right here and here, we'll then wait for some displacement over here and here, look to enter along with smart money, and then anticipate the daily range, painting either bullish or bearish if we are bearish on a specific day. So again guys, orange is your accumulation, red will be our manipulation, and blue is our distribution phase. Now guys, one more thing I would like to add is that you must have a higher time frame understanding. If you do not utilize the higher time frames, this is all useless, because then you are trading just patterns and you have no higher time frame narrative or bias, making your trade ideas low probability. So with that being said guys, I think the best way for me to now explain this to you guys is for us to go through a bunch of examples. So right now we are currently in the New York AM session. This is a time window we would be looking to trade in, and let's play price out. So if I was looking to target this buy side liquidity pool right here, I'd first want to see the sell side liquidity pool get taken out first. So let's see if that happens. All right, we get that right there. And as you can see, this is a valid liquidity sweep. Why? Because we failed to close below it and displace below it. You can see we quickly rejected that level and pulled back into the range. So now let's see if we get displacement to the upside and a potential market structure shift to help us target this buy side liquidity pool. So now let's see if that happens. Okay, no displacement yet. Let's wait patiently. Nothing yet. Okay, here we get displacement. See how energetic that was? And we also get a fair value gap. This would be our market structure shift right above this swing high right there. We closed above it. This one we did not close above it. This one we did. Now that we have our market structure shift, we also have a discount rate in the form of a fair value gap or BISI, and we also have these two consecutive down close candles, which makes up a bullish order block. So for me, the easiest entry here, I would personally use the bullish order block opening price, because if I enter at the top of this fair value gap right there, my stop loss would have to be somewhere down here, whereas if I entered at the opening price, I would have a much better risk to reward. So if I enter at the opening price right here, my stop loss would be below the order block low, and I would look to target the pool of buy side right here for a nice 1 to 2.69 risk to reward. So now if we play price out, let's see what happens. Okay, we get tagged right there, and boom, we hit take profit just like that. So now if I mark out the levels, that was your accumulation. This right here, us going down below the accumulation, this was our manipulation, and then lastly our distribution phase, which occurs right here, just like that. And this will be how AMD would look like on a 1 minute time frame, for example. Okay guys, here I will now show you an example of what AMD or Power of 3 will look like on your 5 minute chart. So first off, we see this swing high right here, it gets violated over here. That's our market structure shift. So we see that occurring right there. Now secondly, we can spot a very clear and obvious consolidation occurring right here. So if I label that out for you guys right now, here I've labeled the accumulation, and we have relatively equal lows building up right there. But also if you guys notice, this now becomes an inversion fair value gap because we traded above it and failed to continue to go to the downside. So we'll treat this as inversion. So I've labeled this out, and this will be our inversion fair value gap that will base our long entry to target these relatively equal highs up here. This will be the pool of buy side liquidity that we'll be looking to target. Okay, we trade below the lows right there, and as you guys can see, we failed to close below these lows here, validating this as a high probability liquidity sweep. So now we want to see some form of displacement to the upside, validating a potential entry to go long and target these relatively equal highs. Okay, and if you guys notice, we hit 50% or consequent encroachment of this inversion fair value gap and quickly rejected. So for me, this is a high probability long scenario if we manage to get some form of displacement. So let's see if that happens. Okay, right there, see that? Get some displacement, and also this SIBI or bearish fair value gap, it gets violated on this candlestick right here. So now you have two options here. You can either enter off of this fair value gap here, okay, or you can enter off of the inversion fair value gap. It doesn't really matter. I'll just enter off of this normal BISI. Okay, so I will place my entry right at the high of that inversion fair value gap, and my stop loss will be right at the body of candle number 1 that makes up the fair value gap or BISI. So, and then obviously my targets will be right at the high, these relatively equal highs in the form of buy side liquidity. So let's let price play out and see what happens. Okay, you get filled there, and boom, look at that low resistance liquidity run. Now very quickly, just to recap what happened over here, we had our accumulation right here, our consolidation, and then again we had our manipulation, which was the down move below the consolidation right here. That's our manipulation. And then now framing the distribution, which would look like this, which is this up movement right there. Okay, all of this up movement was us distributing all the way towards our target, just like that. Okay guys, so accumulation, manipulation, distribution, and this was it on the 5 minute time frame. Okay guys, we are now going to be going over our final example. In this example here, we'll be basing our trade idea off of the daily time frame and then looking to enter off of the lower time frames. So the framework for this trade idea will be based off of this down close candle, which is a bullish order block. I've drawn out the opening price as shown here, and we'll be waiting to see some form of a manipulation, trading down into this opening price, and then wait for some reversal pattern to then look to enter the trade and see the distribution phase pan out and see a bullish trade idea. Now this indicator right here will give us a depiction of what the daily candlestick looks like on the lower time frames. Now I'm on a 15-minute time frame, and I've transposed my daily opening price of the bullish order block down onto the 15-minute time frame, and this is the daily candlestick now showing on the charts. So first off, we can identify our manipulation instantly right here. We can clearly see prices consolidating in a tight range right here. Next, we're going to anticipate a manipulation occurring in the form of us trading down into this bullish order block opening price. So if I play price out, we hit that right there. So now we're going to be waiting for us to see some form of a displacement and a reversal occur at this specific price level. Now guys, a very common mistake people make is that once they start seeing price trading down like this in the manipulation phase, they often panic and they chase price down, assuming that they are wrong. However, this is incorrect and the wrong thing to be doing. We as smart money traders are anticipating this manipulation phase occurring, and we will be looking to enter close to that manipulation. Okay, so just because we are painting bearish, this is all just part of the manipulation phase, okay? And we'll be anticipating the day to close bullish. So now, once we hit that opening price, we'll now wait for our market structure shift to occur, proving that price wants to move to the upside, and take out this high right here for buy side liquidity. Okay guys, so we've now seen our manipulation. Let's see if we have any signs of us distributing to the upside and taking out this pool of buy side liquidity right here. So now if we play price out, okay, we get our market structure shift above this swing high right here. We close convincingly above it with nice displacement. Now, once we've got our market structure shift right here, we can then look for an entry. And a PD array that stands out here for me is this fair value gap right here. Now guys, alternatively, you could have looked at this mitigation block right here, as we failed to take out this low right here. So low, high, higher low. This is your mitigation block. So we have two overlapping of PD arrays right here. Now guys, your entry would be in one of these, either one of these PD arrays. For me personally, I'm going to be looking to enter off this fair value gap since it's better risk to reward. So I'll be looking to enter there and stop loss right below this swing low right here. And then I'll be targeting this pool of buy side liquidity right here for a nice 1 to 2.72 risk to reward. So now if we play price out, let's see what happens. Okay, we get filled right there. Now also another thing I want to notice how we are in a discount relative to that low right there and this high here. We're below 50%. These two discount arrays are below 50%, making this a nice high probability trade idea. We get filled right there with a nice sniper entry, and target will be right here, and we are clearly having some nice reaction off that level and moving nicely towards our target. So now playing price out, we hit that right there and move significantly more above that level right here, and this will be your distribution as shown here. So again guys, accumulation right here, we're consolidating right here, we manipulate to the downside, hitting our daily bullish order block price level right here. We then get our market structure shift and displacement as shown here before entering in the manipulation area. If I drag that along, we enter right there, and then we see our distribution forming the rest of the daily range. Now guys, notice how we are entering below the opening of this daily candlestick. Okay, so we're entering there and assuming and anticipating that we are gonna expand to the upside. Okay, so now guys that were chasing this, there will be our loss. Okay, we don't chase price, we anticipate beforehand. Okay, that's how we get these nice high probability, high risk to reward trades. Now guys, if you give me 30 seconds, I promise you, you will change the whole trajectory of your trading career. With this mentorship guys, I will teach you the exact model that I've taught to my members, which has helped them to scale to over 7 figures plus in funding from prop firms, and they are consistently making $10,000 a month from trading, and they are quitting their jobs for good. I have literal students that are making yearly and monthly salaries in a day. Okay, you guys might think this is a lie, but trust me guys, when you know how to trade, this is completely possible and is a reality that most people are living. Now, you'll have a whole host of benefits as listed here. You can have a read for it yourself. This is a lifetime access for a one-time payment only. I have now put the price down by £100. It was previously £249.99, but you will now be getting it for a limited time only for £149.99. Okay, make the most of this offer, guys. Learn the skill set properly. I'm willing to teach that to you guys here for a specific price. I will teach you the exact blueprint to help you get funded and quit your job, guys, and live a life you've always wanted to live. Stop wasting your money on prop firms blowing challenges when you have not even learned the skill set in the first place. Okay, so start your journey to profitability today. Click the first link in the description and be a part of the best ICT community in the world. So guys, thank you so much for watching. I hope you learnt something in this video. If you have any questions, please let me know in the comments below, and I'll see you again next time.